Awesome. Welcome to episode 12 of Ask Anthony. I'm Anthony Peluso, founder of Wealth for Life and Australian property expert. And my special guest today is none other than Sophie Gatto, Wealth for Life's in-house mortgage broker. How are you, Sophie?
Hi Anthony, how you going?
Good.
Great to be here.
I know you are. Today, Sophie and I are going to be sharing tips on how you can make sure that you get approved for finance when applying for finance, okay? But before I get started, for those of you that were watching last week, we announced and launched our referral program. So we've partnered with Maya, and your referrals now could earn you up to, or exactly $1,000 in my gift cards, not 100,000, 1,000, let's get that right. So see the pinned post on the top of our Wealth for Life Facebook page and make sure you share it, okay? Here's our flyer as well for those of you that want to see it. And again, today, when you're watching the post, make sure you comment on it. We love your comments, we love your questions, and help share it. It does help our business. So, who's here? Let's see. Anyone join us at the moment? Okay, none so far. Again, don't be afraid to say hello and comment. All right, Sophie, how you doing?
Pretty good.
Sophie Gatto. Now, I've got to ask the question, Sophie. The surname Gatto.
Everyone does.
The surname Gatto.
Yeah.
Are you related?
No relation. But, you know, sometimes it works for me. I've been out and about, you know, staying at a hotel, and they always ask me the same question, and I always get a bottle of champagne. Isn't that fabulous?
It's fantastic. For those of you that are from Melbourne here, obviously you'll know what I'm talking about. For those that are outside of Melbourne, you'll have no idea what we're talking about. So just Google the name Gatto and see what comes up. And as she said, she's not related, okay?
No relation, absolutely.
All right, Sophie, let's get started. Tell us a little bit about yourself.
I love talking about myself like everybody else does.
I know you do.
Look, I've been in the finance and banking industry for probably on to 30 years now.
Wow, yeah.
I have held various positions within the bank, some of the major banks and some of the second tier banks as well. And, you know, I started as a teller, you know, worked hard, went as a supervisor, then I became a branch manager. So I did that for quite a long time, and it sort of gave me insight and a lot of knowledge on how the banks operate, which is great for me. Now, I've been in the broking industry for 18 years, and that sort of helped me as well. So having that knowledge on how the banks work, how I can do things and make things happen for clients has also been an advantage. I'm accredited with 35 lenders, so there's a lot of products, a lot of interest rates.
So what does that mean, Sophie? When you say you're accredited, for those of you watching here, right, that may not be too familiar with the lending and investment market, when you say you're accredited with 35 lenders, what does that mean, darling?
I'm licensed. I can actually see clients and offer them various products from various lenders, and we can lodge applications with all those lenders, or I can.
Yeah.
So I've got no loyalties, Anthony, with the lenders.
I hope you've got loyalty to us, though, right?
100%, absolutely, and to the clients. So my loyalty stays with the clients.
Yeah.
I evaluate the clients. I see what their objectives are, and what they will hope to achieve. So that's very important.
And I think, you know, one of the questions that I know we went through these questions beforehand, but one of the questions I didn't put down was the one that's very important that just comes to mind. What do you see as the major difference? Because you've got a lot of people out there that will go out, and when they're going for probably more a home loan, they'll go to their branch manager, their bank. Tell us the main difference for those of you that, for those that, you know, that are looking to get into the market, whether it be their own home or investment. What's the major difference, or what are the differences between going to a bank directly versus using a mortgage broker such as yourself?
Look, I don't know many people that have got time. This is, you know, consumers, look, they work, they've got family life, they're very time poor, and that's what they tell me. They find it hard to come into our offices, so we go out and we see them.
Yeah.
So it's, and because there's a lot of confusion going on, there's a lot of products, they haven't got time to investigate. They haven't got, if they go into the branch, one particular bank, they'll offer that particular lender their products overall. But whereas brokers, like myself, as we're accredited with 35 lenders, I can give them various lenders.
Yeah.
We're kept up to date nearly every day with changes.
Yeah.
Whereas, you know, clients haven't got time to do that. They don't know, so they come to us. We're specialists in that area.
Yeah.
And we've got it at our fingertips.
Yeah.
That's the difference.
Yeah. And again, too, just to make mention, that's true. A lot of people are busy during the day and are working, so they actually can't get into a bank. And you do accommodate them outside of business hours as well.
That's right.
So you can go to their home, right? See them on weekends, where it's difficult for banks to actually have their doors open. And let's face it, banks right now are undertaking a major strategy to actually close as many doors as possible and actually push a lot of their business online or to brokers such as yourself, correct?
That's right.
Yeah.
You know, the banks, you know, the clients would have to, you know, sometimes they're at home at night, they might want to ring their bank to get information.
Yeah.
They have to wait on the phone for 15 minutes, 20 minutes before they get someone.
Amazing.
And then they haven't got the knowledge or the expertise to advise them over the phone. So,
excellent, excellent. So, the big question, tell us about the existing landscape of the lending market at the moment. There's a lot of press, a lot of media about the lending market and what banks are doing and some of the restructuring and the changes they've gone through. So, tell us your insight, because I know you're on the pulse and I know that if something happens at 9 o'clock this morning, you'll know about it at 9:01.
Yeah, that's right.
So, tell the people out there.
Look, the lending environment, Anthony, I will tell you, it's tough at the moment. And there's a lot of influences, which I'll talk to you about a bit later on, but the lending environment at the moment is just forever changing. We get notified as brokers with all the policy changes, but the clients don't. They don't know. So that's why they come to us. So we get the knowledge and we get and we can pass that on to the clients. Because of the lending environment changing as it does, you don't know from day to day whether you can get an investment loan interest only.
Yeah.
Clients are receiving, even at the moment, letters saying, sorry, but your interest only period's finishing. We're going to change it now to P&I because we don't offer it anymore.
Yeah.
So, you know, I've been getting calls from
P&I
clients.
being
Principal and interest.
Yeah.
Principal and interest. And clients don't want principal and interest, especially for their investments. They want to stay with the interest only. So I'm getting a lot of calls about that, and so I review the clients and I take them to, the best lender that can offer them the best rate.
And I think that's one of the great things about using a mortgage broker is because, when you're going into a bank, unless you know how banks operate and what their lending criteria is, and as you said, it's forever changing. You could go in there and really vulnerable as a borrower, as a lender.
That's correct.
And probably harm your chances of getting a loan. When working with a mortgage broker, one of the really important things is the mortgage broker actually works with you, right, the purchaser, to actually put the application in a way that gives you the best possible chance of getting your loan approved. Because someone like you, Sophie, and you know what banks are doing, so you know what they're looking for and you know what they want to see.
Yeah, that's right.
Okay.
Yeah, I mean, like I said, we get all the notifications via emails of what's coming up, what's changing, what the lenders want us to get from the clients, what information they require to have a successful application.
Wow.
So it's very important because, like I said, it changes all the time. A client may go into a branch if they want to do that, and if they've got the time, one person might say, "Yeah, bring me this, and that." Next week it might have changed. Yeah. So they're forever chasing their tail.
Yeah, and I think what we commonly see is that, let's say that somebody's with a NAB, right?
Yeah.
They'll only go to the NAB to look at what products and services the NAB have.
That's right.
But you've got 35 lenders. And I've seen what some of the products that some of these lenders have at the moment are amazing. Yeah. That the big four, the big five actually don't offer.
No.
And I think as a borrower, as a purchaser, right, you need to understand what else is out there as opposed to going to the big five banks or the one that's closest to you or your incumbent lender that you have right now, because you won't, you'll close yourself off from a lot of the other products and services that, you know, some of those other lenders have on the market.
See, but we do like product comparisons. And we'll look at a range of various, depending on what the client wants, what their goals are. I could do that in 10 minutes. So, you know, I'll go across the board, I'll see the best rate, what discounts I can get, what pluses are for per lender, and I can have it to the client on an email, you know, in less than an hour.
That's brilliant.
So then they can make a decision, say, yeah, terrific, that sounds really good to me, Sophie, let's move on with this one.
Excellent.
So, yeah, saves a lot of time.
Good, good, good. All right, talk to us about the impact of the Banking Royal Commission again. You know, something that's made headlines this year with, you know, a lot of the lenders, how do we best call it?
Slapped on the hand.
Interesting, questionable lending practices, let's call it, okay? Kind of keeps us both on the street still. Questionable lending practice, but what impact has that had to the market? At
the moment, look, the Royal Commission is due to give its findings, the official reports coming out in February next year.
Okay, what does that mean?
That means that they're going to put together all that they've investigated, they'll put it in a report, and supposedly they're supposed to come up with recommendations of how it's supposed to work. Now, they have just released a 300-page report, an interim report, which hasn't bedded down what they want yet, but I think we're going to wait for that report in February 2019. Now, what they have identified, which is really interesting, is household expenses, living expense, and that's a major critical point at this stage, because they had ANZ up there, and just to mention one of the majors, and they asked them, how did the bank identify the living expense? What process have you got in place to make sure that what the borrower is reporting on the application is true to what's actually happening at home? And they really couldn't answer it. They said they were going by the old HIM system. And the Commission turned around and said, well, you need supporting evidence. You need to get bank statements. You need to get credit card statements. And funny enough, Anthony, I was talking to someone from Westpac, and they've got a special team which they get them to go through all the statements and check all the living expenses to make sure that what the borrower is reporting on the application is true and correct and not misleading. So it's pretty tough, but you know, that was something that the Royal Commission identified. Now, the report hasn't come out, but the banks have gone back and have implemented these new policies and procedures that are out now, even before the report's due in February.
Got it.
So they're putting stuff in place already, which are affecting the lending. That's right. Exactly.
Okay. So that's interesting. So what would you say are some of the do's and don'ts right now when it comes to lending? But well, based on what you just said.
What I can tell you this, the do's and don'ts. Be honest on your application, because they're going to find out anyway, because all banks, all financial institutions will do a credit check.
Yeah, what does that, for the viewers out there, what does that mean?
The credit check is, it's a reporting system, and all the banks use it. So that gives them an overview of what your habits have been in regards to lending. Whether you've applied for a credit card, whether you've gone for a recent home loan or investment loan, it'll be on this report.
Right.
If you've had a default, meaning that you've missed payments and you haven't paid a particular provider, like Telstra or your gas bill, it'll be on this report. And the more you have on it, the more inquiries, your point will go down. And it affects your lending abilities. So I'd be honest, because sometimes clients think, oh, I've got a credit card, haven't used it for 15 years. It's just sitting there in case of emergency. You know, clients don't forget that that will be part of your serviceability. So try to be honest. Also, try to get all your documentation with the application that the broker or myself or a broker puts together for you. You need to get the documentation right. Because if you're going for a purchase, Anthony, for investment or a home, if you haven't got all your supporting documents with the application, the settlement might be delayed and there's penalties. So it's important to get your documentation correct. And we give them guidelines and checklists. One thing you don't do is apply for a loan application with 5 different lenders at the same time, because that'll hit your credit file, and they want to know why you're applying for so many different lenders.
I think once you do that, like it used to be popular in the past. I know a lot of people used to do that as a way to
get the best rate.
Get the best rate, but what happens is when you apply for, in my experience, you apply for one lender, and they see that you've also applied with 4 other lenders, and then the one lender that you've applied with that wants to do the deal with you puts their attention on trying to understand why you got knocked back with all the other lenders. So then you give them a reason to actually knock you back. All right?
Exactly.
So
right.
it's interesting.
So, you know, for me, I prefer if clients, or, you know, potential clients, you know, give me a call. I can have a look at their current situation. I can do a serviceability. I can say, right, this lender will give you the money. You can borrow from this lender. So it's better to do that than run around and put 5 applications in. You know, because I can compare the rates. I can get you the good deal. So come and see me.
And I think, listen, it's really important, and guys out there watching right now, please comment and share this post. I'm sure you're getting a lot out of it, and the best stuff is yet to come. So, any questions you've got, please ask. Sophie should be more than happy to answer any questions you've got. Any comments you'd like to make, or you know, share this post, we'd really appreciate it. But you know, in saying that, like, I really want to emphasise out there, because we do a lot of business, you know, with mortgages at the moment. And if you're buying a home or you're investing, like, let's look at it, you're buying a home, right? For a lot of people, it's considered the most important purchase, right, that they're ever going to make, okay? Get it right, guys. Get it right out there. If you're putting an application in, be diligent in your paperwork. Keep documentation, store stuff online so you don't lose it. Be really, really diligent with your documentation, and give yourself the best opportunity to sit down with someone like Sophie and get your loan approved, okay? And, you know, one of the things I see a lot too is people missing payments on their home loan. That's probably the biggest no-no, okay? So, you know, be very good with your money and money management, okay? Diarise your repayments. You can have direct debit come out, so your home loan repayments and your bills, for that matter, are actually, direct debit's a great way, because we're human beings. You know, if we're relying on a due date on an invoice, you know, we get busy, it hits on a weekend, and you know, you get taken out on, you know, on a conference somewhere, you may miss that stuff. So just set up direct debit facilities where the money comes out of, you know, your savings account or your nominated account as such, and you know, so payments come out and you don't miss those payments and your credit file stays clean. Because I can tell you from my own experience, you want to have a credit report that is clean. The worst thing you can do as a borrower is to have a dirty credit file, meaning that you've got a court judgment, or you know, you haven't paid bills, or you've missed home loans. You know, because I think it's 5 years, Sophie. You've got to wait for.
That's right. Yeah, it's 5 years. But also, look, what we should be thinking about also is keeping a good credit rating. Go online. A lot of providers can give you a free credit file report. Now, always check the report, because I find sometimes there's errors and it may not belong to you. There might be a data entry error, but it could impact you as a borrower. So make sure that when you have a look at the credit report, that what's listed on there relates to you, and you have done these type of transactions.
So we have a question from a viewer that have asked, can you help people check their credit files and help them review their living and expenses, just to help them to secure a loan?
So you want to?
Absolutely, yes.
So the question is, can we help people
check their credit file and also help them review their expenses?
That's what we do as a standard now. We do credit checks. to see what type of credit inquiries has gone onto their credit file. And we advise the client, we ask the questions, have you done this, this was this date, was it, you know, did you go ahead with the credit, did you get this credit card? So they answer that, but you know, clients can go, because they're free, that they can go online and they can actually get a credit report.
Here's one thing, I know I've got this set up because I'm quite active in the market, like, is it Beta Advantage? Is that
Yeah, but it was taken over by QuickFacts. But there's mycreditfile.com.au. There's also finder.com.
Yeah.
We'll share those links.
Yeah, there's various. If you type in Google, you know, credit check, you'll come up with providers that provide that service.
And one of the best services they've got is that you can pay a month, I think it's an annual subscription, and you get notified every time somebody hits your credit file.
Yes.
So you get an email to say, hey, so-and-so organisation hit your credit file yesterday, and then you know whether it's correct. Like, yeah, I applied for a credit card, right? So then you get notified. Or it's incorrect, and you may want to look at it a little bit further.
Yeah, it's a minimal fee.
Yeah.
Also, good to remember is stable employment is another good way. You know, banks don't like to see that borrowers changing their employment every 2 months.
Yeah.
They like to see stability.
Correct.
So that's a big tick for them.
Yeah.
Also, a good savings record is good.
Yeah.
So if they can put a little bit of money from their salary away, which is good, they'd love to see that. So my tip is don't spend more than you earn. So try to save a little. It's really important. Also keep your living expenses down. That's sort of critical. Just watch what you're spending. A lot of new borrowers, existing clients that we have, you know, they should be checking what they're spending each month. And believe me, they'll be surprised.
Yeah.
So they're going to try to keep that low if you can. Also, they look at the ability to repay the debt. So that's why it's good to come and see a broker like myself, and we can do a serviceability and make sure that you can repay the debt that you're going for. So, yeah.
Again, one of the most important things to remember is the mortgage broker works with you. Okay, you, the purchaser, and the borrower of funds. A mortgage broker such as Sophie, she's on your side of the table. She's working with you to sit down with you and look at how to best position your application to the lender so you get approved. And that's one of the most important things. When you go to a bank, they're not necessarily working with you, okay? They're working for the bank. Someone like Sophie actually works with you, the borrower, to say, okay, how do we work together? How do we sit down together and work out how to get this application approved? And if there's information that's missing, right, go get that information. So when you submit your application into the lender, you increase your. I've always used a broker. I've never borrowed directly. So you increase your chances of getting your loan approved.
Yeah, I think it's it's vital that clients do use a broker, because, you know, like I said, we've got no loyalties to any lender, and we will look for the best deal.
Yeah. We
will look for the best product. We will put the application together for the client. We follow it through from the minute we send it into the banks right until it settles. And that's a big thing, because you don't want the banks to ring the clients every 5 minutes, get me this, try to get me that. They come to us and we do the follow-up.
Sophie, I know firsthand, I'm astounded at the amount of money you've saved our clients. I mean, you go in there and straight away you pick through their financials, and I think, you know, there's some clients on the spot you've saved them 15, 16 grand per annum, which is fantastic. So I can certainly attest to what you say there. A comment to add on that is, you know, banks are looking for stability, as you said. Banks are looking for you know, banks like certainty, like all of us, right? If there's any irregular activity on any of your statements or your savings accounts, that's where, you know, you get a red flag, and, you know, they start to ask more questions. So sit down with someone like Sophie, because, you know, she can prepare your application in a way where, you know, you increase your chance, you stack the odds in your favour, basically, of getting the loan approved. So, leads me to the question, what does a borrower need to do to ensure that they get approved for finance?
Well, they're going to come see me first.
Yeah.
That's, and I can go through it. Look, they've got to, like I said, they've got to have stable employment, a good credit rating. the banks like to see a little bit of savings. A little bit. Doesn't have to be astronomical.
Yeah.
A little bit of savings.
Yeah.
And like I said, they've got to be able to service the debt. If a lender, they think to themselves, well, if the rates go up, where's the extra money going to come from?
Correct.
Where is this extra money going to come from? You know, can they reduce their living expense?
Yeah.
So it's questions like that. So the banks look at that now.
Yeah.
You know, because it's been, you know, part of the commission.
Yeah.
You know, part of APRA as well. So it's a requirement.
And another thing we do quite well, and I think brokers do quite well, or good broker anyway, should actually plan you out for at least, you know, not just the loan you're going for right now, but you know, your next 5 years. Because I know we get inundated with calls from clients. Oh my God, you know, so and so bank has now taken my interest-only loan to principal and interest. What do I do? And then you're caught on the back foot. And because you want to handle it before it flips to principal and interest, which is paying off the mortgage at the same time as the interest, right? You're caught on the back foot, and you then limit yourself to what options you have available, because you're going to run out of time before it flips over to principal and interest. So careful planning. So when you sit down with a mortgage broker, whilst you may be going for a home loan or an investment loan today, it's all about planning the next 5, 10, 15 years so you don't get any surprises. And I think that's one of the things you do really well. There's very few of our clients that get surprises as they're going down that path of investing or getting their own home. And it is important, because I know you and Betty get on the phone as soon as there's an announcement or there's a change in the lending. You get on the phone, or you blast out an email to our database. And on most occasions, you actually call the clients directly and say, hey, this will affect you, so let's sit down, let's sit down. And you give them a good 6 months of breathing room before the change takes place. And I think you know, that's one of the things we do as brokers very, very well.
Yeah, I think clients have got to remember that they should be reviewing what their current lending is every 12 months. They should look at it. They look at their insurance when their car comes up. They'll hunt around. They look at you know, their gas bill. Are they getting a good discount? You know, their home, their investments are, you know, a big part of their long-term wealth management. So I think that they should be looking at 12 months, getting reviewed by a broker. Ring me up. I can come down, we can go through it and see whether, you know, whatever's going on in the marketplace, things that may have changed. There might be some things which are better that might suit the client better. So they've got to have that idea, look, I've got to, you know, Christmas is coming up, I'm going to sit down, I'm going to have a look at my loans, I'm going to see what I'm on, see what I can get, and that's what they should be doing. Yeah, no, that's great advice. All right, I think we're getting to the end of our wrap-up. Sophie, any last thoughts, any last words of wisdom? 30 years in the industry. I know from where I sit, I get asked that question, oh, the property market's softened off. Well, here's what I'm going to tell you, right? The demand for real estate, the demand for property and investing hasn't actually dropped off at all. What has is the ability for people to get finance. So people going out there still have a very strong appetite for real estate. They just can't get the finance to support their purchase. So again, sit down with someone like Sophie, come in and say hello to her, and have a look at, you know, what she can do for you. And at least you'll get an understanding of what options are available to you. Because 35 different lenders, I mean, it's astronomical. It's astronomical, and each one's got a different product. They've each got a different interest rate, different requirements. So where you may get approved, where you may get knocked back, right, or declined with one lender, you get approved with another lender. So don't get disheartened if you go to, say, I don't know, ANZ Bank and you get declined. It doesn't mean that every lender is going to decline you. It just means that one out of probably 60 lenders have declined you. Okay, so I'm sure that all of us out there have been declined. And if you're active in the property space and you're accumulating quite aggressively, part of your plan, you've got to have a mortgage broker on your team, a really, really good mortgage broker, because they're your access to money. Well, no, to give you options. If that didn't work for me, well, let's have a look and let's go somewhere else. What are, you know, that particular lender's criteria? Let's go over here and let's talk about that and get the advice and get the loan. Excellent. Sophie Gatto, been a pleasure talking to you as always. Thank you. It's been great. Thank you for sharing your 30 years of wisdom and thoughts, and I know our clients just love Sophie. She's done a tremendous job for them. 1, save some money. 2, make some money.
right? And you know, and sets them up in a way where they continue to invest and build their wealth. So thank you very
Thanks,
much
Anthony. It's been terrific
for joining me.
Thank
Guys, please share the Facebook stream if you can, and all your comments, all your questions. We had one of our viewers, I think, just come in yesterday and pick up an Apple Watch. So she was very happy, I know. Which leads me on to our Christmas bonus. We just love giving stuff away, don't we?
We do.
We just give stuff away all the time. Our Christmas bonus, looking to purchase property, not sure where to start, come and see us. And we're giving away watches, we're giving away, what are we, Cherie? iPads, iPods,
smart
home,
speakers,
home pods.
Yep.
Wonderful.
Great little gifts, great little additions under the Christmas tree. And what, we're 2 months away from Christmas already?
It's unbelievable.
Crazy time.
Yeah, it is crazy times. Yeah.
So, people out there, thank you for listening in, tuning in. We really appreciate your feedback. Again, please share our stream and comment. Any questions you've got, Sophie would love to answer them.
Cool.
Better still, come in and say hello to her face to face. She's done some tremendous things with our clients and has an amazing track record of getting great results for our clients. Next week's episode, I'm going to talk about the only 3 ways to make money from property, and there are only 3 ways to make money from property. So until next week, please share, comment, look at our Christmas bonus, look at our Maya referral promotion. Some of our clients have done extremely well through our referral program, okay? Until next week, enjoy your week, and we'll see you 12 o'clock midday next Tuesday for episode number 13. Thanks, Soph.
Thank you. How are you doing?